Welcome once again. This is Si Wing Yi, and today I'm going to share my screen and we'll discuss the Redfin report on the rental market tracker. Rents rose 7.8% in October, slowest growth in 14 years. Now, the purpose of me presenting this is for you folks out there, especially your primary first-time home buyers out there in the country. So would it make sense for you to continue to rent or take the plunge to purchase your first primary home? And also for investors, real estate investors, especially mom and pop investors, if you want to buy investment property whereby the rent will cover your payment, meaning whether it's a cash flow is meet your criteria, then it's a good opportunity for you to learn about the data, what I'm about to share with you. All right, so without further ado, let me share my screen and go over the Redfin report. So the 11 major U.S. metros saw rent decline with the largest drop in Milwaukee, Minneapolis, and Baltimore. However, the median U.S. asking rent in October still rose 7.8% year over year to almost $2,000, which is the smallest annual increase since August 2021. And so October marked the second straight month of single-digit rent growth. So still rent growth, nevertheless, following roughly a year of double-digit gains on the rental rates. So rents have declined 1% on a month-to-month basis. So nothing drastic so far. And here's the quote by this individual. Demand for rentals is slowing because economic uncertainty is prompting many renters to stay put, and persistent inflation is shrinking renter budgets. That's causing rent growth to cool, said Redfin Deputy Chief Economist Taylor Marr. And this person go on to say there are signs that inflation is starting to ease, but it will likely be a while before renters see meaningful relief, given that rents are still up more than wages. Okay, so yeah, so that's what's happening. And this particular graph right here is rental market summary, October 2022, which is last month, is almost $2,000, and year over year 7.8%. And so rent dropped below 2,000 per month. You know, one thing I'm really curious to find out is how Redfin is doing their research. Are they including all the multi-units, all the big apartments in these locations, or also single-family homes rental? So remains to be seen. I believe that the Redfin have calculated all the rental units, not just multi-units, not just apartments. They are also calculating the single-family home rentals. People that are renting single-family homes, which is typically they pay higher rents for single-family homes as opposed to apartments. All right. So without further ado, let's get back to the article, and here it is. So this chart indicates before the pandemic. During 2019, the median rent was only a little bit more than $1,600. So 2019 to 2020, when the pandemic started back in 2020, as you can see, the rent has skyrocketed from $1,600 to $1,700 the first quarter of 2020. Then the second quarter of 2020, we have seen a steady increase of rents to a point where it's almost like $1,750 median rent nationwide. Then toward the second half of 2020, the rent have decreased back down from $1,750 to around $1,650 toward the last 2 quarters of 2020. Then when 2021 began at the peak of the pandemic real estate boom, rent has really skyrocketing with no ending in sight. So from the base level of 2021, at the beginning of 2021, around 16, almost 1650, then the rent has skyrocketed throughout 2021, all the way, I mean, throughout the entire year, as a matter of fact, has raised the rent went from as low as 1650 all the way up to around $1,900. That is the double, even triple digit rents. My recollection is that we cover Florida quite a bit for my real estate investors at many places in Florida during the pandemic, especially 2021, in Orlando, Tampa, Florida, or Miami, Florida, or Southwest Florida, Cape Coral. We have seen rental rates increase 30, 40, 50%, which is absolutely historic, mind-boggling, totally insane. And then getting back to this chart, when 2022 began early this year, 11 months ago, the rent continued to elevate, which is amazing. Look at this, from 1900 all the way to 2000, throughout the second quarter of 2022, the rent has went up at the benchmark at the threshold of $2,000 to 2053 in August, a few months ago. And even when all the way up here, we're talking like maybe like August or September, October, it went, the median rent nationwide went like, how much? $2,400. That is, I'm just guessing, but this is historical rise of rent in the past 2 years during the pandemic. And then since October or September, October, right after August, the rent has decreased from $2,200, $2,300, $2,400 back down to below $2,000 rent as we speak to you toward we're coming toward the middle of November as I'm doing this video. So just a slight decrease. Let's find out why. So rent growth at slowest pace in over a year, as we discussed. And so still at the peak, as I told you, at the beginning of 2022, the rental rate is just absolutely mind-boggling. Now has gone back down to this level, a little bit below 2,000 per month, and yet still year over year, the rent growth has is at 7.8% as of from October 2021 to October 2022. All right, so let's go over the specific markets. Rents decline in 11 major U.S. metros, which they are the following: Milwaukee, Minneapolis, Baltimore, Seattle, Boston, Atlanta, Columbus, LA, Chicago, and Houston. Most of these are very large metros. I have to suspect that the landlords in these markets, I suspect, they cannot charge any more than what a typical renter can pay is based on the budget. So, landlord can charge all they want, but if the renters can only pay a certain amount, like maybe 30% of their salary or for monthly rent, then if you try to charge more, they can't afford it, those renters. So there's a certain threshold, the max limit you can do. That's why we're seeing some pushback in terms of how much more you can charge rent. So it's still a case-by-case basis. So maybe there are more apartment units coming online as well in these major metros. Most of these top 11 slight rental decline are located in the major markets. Now, just like anything else, real estate is always is very, very local. You cannot paint a broad brush, if you will. So real estate is very local, whether for home ownership or whether for rental markets, is very local. And this next paragraph is an indication of such. By rents increase most in Midwest and South. In Oklahoma City, rents jumped almost 32% year over year in October, the biggest increase among 50 most populous metros. It is followed by Raleigh, North Carolina, at 21%, Cincinnati 17%, Louisville 15%, and Indianapolis at 15%. So the top 10 in rental increase in Midwest and South are, like I said, Oklahoma City, Raleigh, Cincinnati, Louisville, Indianapolis, Indiana, Providence, Rhode Island, Salt Lake City, Nashville, Tennessee, Pittsburgh, Pennsylvania, and San Antonio, Texas. Okay, so again, here are the medium asking rents in October 22. So again, there are two categories of you, right? Some of you or many of you are still renting, and you are sitting on the sideline, perhaps try to buy a house. If not now, later, it depends. And the rest of you are real estate investors. Where can you capture the most rent for the most affordable property you're going to buy as an investment property? So this your two category of people watching my video, I believe, will benefit the most learning from this data in my presentation, and because that is my background. Our business model is that we help real estate investors, mom and pop real estate investors, to go to the most affordable market in the country and compare that to rents. So whether they can achieve positive cash flow or not on a monthly basis, based on 25% down payment threshold for real estate investment, residential investing. Right. So that's what we do here. So again, the U.S. metro areas medium asking rent. So again, for the two category of people, first-time home buyers or whoever you are out there and real estate investors, you will have to crunch the numbers to determine whether you should buy a home to live, or as a real estate investors, you can match up the price of a rental property you want to buy versus the medium rent. That way you can calculate the returns and cash flow that will meet your criteria as an investor. Does that make sense? So I'm not going to go over too specifics on all these cities, but let me glance through it to see year-over-year change recently has slightly decreased in terms of rental rate increases on a lot of these metros because they have gone up. The rental increases has gone out, has skyrocketed for people who are renting. So really doesn't pay. My honest opinion, it doesn't pay to be a renter. You're making landlords rich, so you're making their mortgage payment for them. So it'd be nice for you to, for renters out there, understand. If you're renting, you can paying a lot of rent depending on what area of the country you're located. So Austin and all those cities. So let me scroll down so you guys can see. This is on Redfin report anyway. You can easily access that if you want. But here are the rental rates. Okay, some increase, some has decreased. So at the end of the day, so you have to determine what's right for you based on your goals and objectives as a primary home buyers. So if you continue, you have to match up. If the rents you're paying right now are lower than the mortgage payment, then it behooves you to buy a house and achieve the American dream. But then again, if you lack down payment, what have you, credit, if you cannot buy, or if because of much higher interest rate at 7%, if you cannot afford it, you cannot afford it to buy, then you have to subject the landlord to charge a higher rent. So that's where you do not have control over your finances. If you are a renter, you are at the mercy of the landlord that have the ability to charge you whatever they please, whatever they want, with certain limitations. So again, historically speaking, the American dream, owning a real estate, whether you own an occupied property or a rental property, is the best way to achieve wealth. Again, if you have the ability for you first-time home buyers out there to afford the mortgage, given the much higher mortgage payment, and I discussed that on other videos. You need a 40% more in salary right now to afford a home, which early part of this year at 3.5% interest rate, you can afford with a lot less salary earlier this year. So it is what it is. You have to understand where you are coming from. Each individual out there, you can make your decisions, do your research, whether you will wish to continue to rent, and if you want home prices to come down in value over the next couple of years, maybe, we don't know. So many of you sitting in the sideline, and I understand that. So for your real estate investors out there, if you want to achieve good cash flow, good return, mom and pop investors out there, I behoove you to do your research, do your calculation. My opinion is that you should buy in the south and southeast area, because the homes are very affordable, and the rent will basically pretty high. That will cover your debt service on a monthly basis. So that's all I have to say. So if you that pretty much concludes my presentation. If you find value in this short video, please smash the like button and also subscribe to my YouTube channel. And for those of you that want to become a real estate investor or already have invested previously, perhaps you might want to subscribe to my newsletter or my database on my website below you. Sign up for the free newsletter. You can become a free member of our real estate investment club, so you can receive a weekly free newsletter about great real estate investing information, so you could potentially create wealth through rental property ownership. So that's all I have to say. Thank you so much for watching. This is Siwen Yi, and we provide great real-time, very relevant real estate information for primary home buyers, as well as potential and existing real estate investors out there. Thank you so much. I will see you on the next video shortly. Have a nice day. Bye-bye.